Good morning, everybody. It is the 11th of November. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Good morning, guys.
Good morning.
Happy Armistice Day.
Yes. I'm glad you said that. That was very clear. And you were practicing offline, off air.
Well, Armistice.
Yeah.
Always got to pay your respects, gents.
Absolutely. Absolutely.
Good stuff. So more rallying yesterday in markets. A little bit a little bit more settled, but still positive overall. That's despite the fact that both France and Italy both recorded their highest daily coronavirus death tolls since April yesterday, and the Paris region apparently is close to exhausting its ICU capacity, with 93.6% of intensive care beds across France now occupied by COVID-19 patients. So although we have obviously some fantastic news from Pfizer with regards to the vaccine, there are obviously issues that are very relevant right now, and we still got to deal with that. So not looking good from that perspective, but clearly markets are shrugging that off for now.
It doesn't feel like that here, does it? It doesn't feel like we're sort of... The first time it was panic, wasn't it?
Yeah.
Proper panic, and we had lots of pictures of the intensive care units and all the rest of it all over the news. You're just not getting that at the moment, are you?
No.
It's sort of it just. I said to Tracy, I know we're in full lockdown, but it doesn't really feel much different than it was before.
No.
To be honest, I mean, we sort of going out for walks and going to the supermarket, which is all we normally do anyway. But it just doesn't seem as intense, even though the numbers are saying that it is.
Yeah. I mean, obviously infection rates are, they're sort of like touting this as a huge amount of infections, way more than we've ever seen, blah blah blah, but we weren't testing the way we are now back then. And I suppose the main thing is you can measure it by is the deaths, because hospital capacity is close to breaking point in France or whatever, and we could be lagging behind. We could sort of see cases rise and the same thing happen in the UK, but it's still close to capacity. It's not at capacity, and we're locking down. So that's going to go
10
down.
days in, aren't we?
Yeah. I mean, I don't know. There's a lot of conspiracy theorists out there. I always like to hear about the conspiracies. Just sort of saying that it's people saying the stories of ambulance crews saying there's nothing going on in ICU, blah blah blah. It's all a bit of bullshit. Apparently, they're all talking bull.
Talking bull, yeah.
Yeah,
we're not the only ones.
Just to control us. We are controlled.
You do like a conspiracy theory, I take it.
Love it. I love it.
Okay. How's it looking on the charts then, gents? What have you seen?
Well, I'll show you my little thing that Trading Views found.
Finish that sentence quick enough.
They've added this little thing to really make your...
You're going a bit robotic this morning, Steve.
Section off your watch list.
Yeah, that's it. Well done, Joe. I was just struggling to know what to say there. So, and it makes it look a little bit nicer. And then you can jump between US indices, APAC indices, or European indices, whichever indices you're looking at.
You're more fitted to Colin.
Am I? What is it? My voice not coming
through? No.
Right?
Our old colleague that used to spend hours just looking at the colours of charts.
Oh, was he your pal? He must be a pal.
Yeah, he was a massive pal of mine.
he can't spend as much time as you staring at charts, just staring into the abyss, looking for the Holy Grail.
I found it.
Well, the interesting one.
I'm going to show you in a minute. You just do the opposite.
Yeah, the interesting one for me, obviously, Ian picked up on the breakout of this channel yesterday, and looks like it's pushing higher. I'm looking at 65.15 as being the next level of resistance, and we'll see what the reaction is there. I'm still bearish on indices in the short term. I think we've got this good news about the vaccine, and markets are rallying higher on the back of that, and it's a bit of a false move, I think, but you can't sort of argue with it.
Agreed.
Until we get a reversal candle or some sort of reversal formation that you can jump on. Obviously, NASDAQ is the one that I've been banging on about for a long time, because I do think that the sort of the rally that it's had from the March lows is unsustainable, and yeah, we'll see that. The other market really that's interesting is obviously gold. We've had that sell off. At the moment, it's posted a bearish outside candle, which is on the weekly chart. That's very bearish. And on the shorter term chart, let's look at the 4-hour chart. We've got a bearish flag appearing now. This flag is the flag pole. This move here, which is the really aggressive move that took place on the 9th around 9 or 10 o'clock. That's when the vaccine news came out, and we're potentially forming a bearish flag. Now that would have a bias to break to the downside, and we'd probably see
Quite hideous, that, wouldn't it?
Oh, don't use that one. Yeah, we'll probably see
So I've been messing around with all the settings.
Yeah, nice. Measure move target of something like in there. We'll take it here because that's the high. So it'll be an ABC deformation, but there's potential, obviously, for it to get up to $1,900. I think is a good psychological level to fade, unless there's news on the back of that. But the target level would be down towards the $1,800 on there. And if we look at fibs, I think we had a few fibs drawn in, obviously not deleted them because they yeah, we can see this 1836 as a the 38.2%, and the 50% fib comes in at 1763, which again would be previous swing high. I think we talked about this early in the week, but yeah, so I think really the level to watch in gold is 1849. A break of 1849, I would sell it. Potential for a short-term sell at these levels with good risk reward, and your stop could be above $1,900. That's me on gold. I'll pass the baton.
Okay, Ian, do you want to take a look?
Yeah, I just wanted to go back to that FTSE chart that we talked about yesterday. So we've got this cipher pattern here at 63.70, and it is pretty bang on. It's not there's not much in the difference between the 261.8% extension and the 161.8% extension. There's actually 2 ticks. So I think that's looking quite good for a potential short. And the reason why these patterns are particularly nice, these overextended ones, is because if it closes above this 161.8%, then it's deemed to be knackered, because that is in all the cipher patterns. 127 is one of the extensions and 161.8% is the other. It can't go above there. If it goes above there, then it's no longer a cipher. So I think that's potentially looking quite decent. And you've got to remember the reason why the extension ones are quite better, I believe, than the inside ones is because of the potential target levels, which is 127.2% of the whole pattern. So if it was an inside pattern, you'd be taking your 127 from there and there. But as it's an outside pattern, you're taking your 127 from here and here, which brings you all the way down here to 5283. So the risk reward is knockout, basically. And I want to talk about a bit of waffling about Joe Biden yesterday's first phone call was to Boris Johnson, I believe, and he warned him about the Northern Ireland border and basically not to mess about with it. And that has seen quite an aggressive move higher in sterling today. But I wanted to look at euro sterling because I think this is quite interesting. So basically, over the long term, we've seen quite a decent move lower. This was a very knee-jerk reaction higher, but we are near this previous swing low, which was from 31st of August, which comes in at 88.66, and this formation here, if it holds, is at 88.66. which is again a 161.8% and a 261.8%. So your risk, this is your sort of entry zone. Your risk is just outside here or a close outside. So that's offering quite a good setup this morning. And if you look at a lot of the sterling crosses, they're all hitting these fib levels. So again, that is a perfect cipher pattern, 161.8%, 261.8%. And if you can note at the moment, we're just spiking through it. So we haven't got a close above yet, and I don't think we're going to. So I think those sterling and sterling crosses are the ones to watch today. Dollar index. Again, I think that could be, so we mentioned this 88.6. It could be a flag formation now. It needs to sort of break the swing high. If that does happen, then obviously that will help sterling dollar to the downside. Euro dollar, it's already started its move. And remember, we said that this was sort of the most important time frame. The fact it had broken this C wave means that this next leg is potentially completed. But I think out of all of the dollar majors, sterling offers the weakest outlook against the dollar because of the correlation on all the other charts. And even here on sterling Swiss, I thought this was quite interesting that we're just getting up towards this sort of 361.8% extension, which looks overcooked. I still like shorting Swiss crosses. I think Euro Swiss, I think this is just a wedge. This was what we're called yesterday, and it just sort of moved sidewards up. But they're still looking quite weak, and I think we could start to see risk off pretty soon. And I'll be watching that FTSE 100 cipher pattern for maybe confirmation.
Okay. Cool. Thanks, mate.
Sorry, did you say anything about dollar yen then?
Bill and Ben, no, I left that out.
Okay.
You got something, Steve?
No, yeah, just interesting. I was just looking through the charts while he was chatting away.
Yeah, no, I got obviously that aggressive move up from that cipher pattern.
Yeah.
I think this is critical. If it doesn't break there, then it's basically the correction, which I worked out yesterday. Actually, I think it's on this chart here. If it doesn't break there, then the correction could come all the way down to here, 103.47. Yeah. So again, quite a decent sort of setup for potential short. It's high risk, but your return's fantastic.
You see my ears prick up when you said high risk.
Yeah.
Okay. That's exactly what I wanted to hear. Thank you.
Yeah. Just press the button. Yeah. So that's it. Sort of widened out a bit.
Yeah, but it does look like a critical level, really. I'm looking at the daily chart. There's a cloud cover. Just we're about to test it.
D-mark and see if there's any 13s.
See the daily bottom left there. Yeah.
Is that on your one, Steve?
Yeah. That's my one, is it?
Yeah.
All right.
Yeah. Into that cloud. Yeah.
Yeah. Bottom left here.
Can I zoom it in?
Yeah, like you say, when he was talking about the dollar, obviously it's still in the bearish mode, but it's quite a key level, really. 106, I suppose, the psychological level, 50 tick risk, maybe. Yeah. I don't know, just the volume dropping off as well.
3-hour chart has got a 12 count, so the next 3 hours we'll have an exhaustion, which will come in at 10 o'clock.
Okay.
So that would so these are demark counts. So this the red ones, believe it or not, are sell signals. So basically, if you get a 13 here, then you project the high of that candle or the highest candle on top of that candle to work out your stop. So if we get a 13 next candle, then I suppose your highest candle is probably going to be there. So the stop would give it around about, I don't know, 106.12 probably.
Lovely.
But it's looking, there's probably a bit of divergence there as well, but I haven't got that on. But
yeah. Okay.
Yeah. So looking close to exhaustion.
Okay. Right. So gun to the head trades from yesterday. So we picked our 3 trades. Here they are on the screen now. So we went long of sterling Oz, short of Nasdaq, and short of Euro Swiss. Tiny loss for Ian. Stop out for Steve, and a 1.35R win on sterling Oz.
He's fiddling the books again, Stevie.
When was I stopped out? Is he mad or what? When did Nasdaq trade 11,923 yesterday? Or even in the last few days? Come on, Joe.
What am I looking at here?
Oh,
you porn! I saw it.
Oh,
that sounded like you just finished watching it.
I don't know. I just thought default just put it in that you get stopped out. I don't know why.
I see that.
Oh yeah. What was I looking at then? Maybe I was looking at the Dow or something.
Yeah, I was definitely stopped out at 11,900 in Dow.
I'll sort that out. I do apologise.
Yeah, no, it closed at. I'll tell you exactly, because I do sort of take this seriously, especially when I'm being accused of having a loser when I didn't have one. So
11,629. Happy with that?
11,629. Yeah.
Okay, so a 1R win for Steve. I do apologise. I don't know why I've picked that from.
No, don't worry. I'll let it go this one time. One more time.
Yeah, one more time. Okay, so
start checking mine as well.
Yeah.
So yesterday we had 2 wins and a tiny loss. So it was a good day for us yesterday. A little bit of a tick up in the P&L as a result of that, which is good. You guys got some trades ready for us today?
Sounds like Stevie's going dollar yen.
Yeah, I'm going dollar Bill and Ben. I am.
Go on, then.
Why not? Here we go. Dollar yen. Yeah, looking at it on the, obviously we've got this bullish engulfing candle on the weekly chart, but it's running into resistance as we see it now, and we've seen the MACD moving lower because of this sideways movement. We've got the really just based on the cloud cover here and previous swing highs. So I'm going to go, and Ian's picked quite a decent level for that stop as well. So let me jump onto the hourly chart. Even that, maybe it'd be good to have a look at how momentum's performing right now. On the hourly chart, we can see prices moving higher, momentum's moving ever so slightly lower. So a little bit of bearish divergence there. But yeah, I'm looking to sell a dollar yen. 105.47. And the stop on the trade will be 106.13, because we like that. And the target on the trade will be, I'm gonna just put I can't remember what level you said to put as the target.
It was 4.
Yeah, I'll do 103.13. What about that? It was 104 or something, wasn't it? Or
the stop?
yeah.
Oh no, the target. The cipher pattern is at 103.47.
Okay, so I'll go in front of that. 103.50.
Starting to move already, that bad boy.
What, down? Right.
Yeah.
Bring the stop in then, Stevie boy. I'll bring it up really tight.
4 ticks on side already.
Get in there. So let's move the stop into 105.80. Ideally 106.13, but for the purpose of this trade, I'm going to get greedy. 105.80 the stop.
Excellent.
And yeah, targeting a move to 103.50.
Boom.
Go. I have to set some alarms in here and just make sure that Joe's not going to try and stitch me up.
Ian, what have you got, mate?
I'm going for that euro sterling trade, so I'm picking bottoms. I think you're going to get a nice bit of divergence there as well. If we just put the old indicator on, what should we have for RSI? Where are you? Yes, lovely bit of divergence, bullish divergence. So anyway, long of euro sterling, 88. I'm going to have to move that. It's moving as well. 88.79. targeting 91 the figure with a stop at 88.46, gives me 6.7R.
Boom.
Boom Shanker.
Okay, I'm going to take a look at gold. Quite liked what Steve was showing with the chart with that potential flag formation taking shape here. This is the hourly chart, so we saw this move down. We've seen a little bit of consolidation, and over the last couple of hours or so, a bit of a break of this small consolidation. So I'm going to jump on now and sell that. It's currently 1877, going to stop at 1887, so only 10 ticks. And a measured move of this formation here takes it somewhere around 1766. So go 1767 as a target, which is 11.2R. So we're all going pretty aggressive today on these. If we land one of them, then it'd be a bloody good day.
Yes, indeed.
Yeah, like it. Yeah, funny enough, our intraday trader, our analyst, posting a buyer break of 1890. So
so it works.
Yeah, stops well placed.
Yeah. Okay. Perfect. Fantastic. So data-wise today, I don't think there's much on the calendar from what I've seen. In fact, nothing of any high impact. Yeah, I think that's
Excellent.
pretty much it.
Nice one.
Are we going to put our day traders story in the? I just got this morning from Twitter. Day trader tries doing the opposite of every instinct and makes millions. It's a bit tongue in cheek, but we will we'll put the link into the whatever it is.
Into the blog. Yeah, send it over.
Yeah.
Cool.
Excellent. Okay, guys, have a good day. Good luck with your trades, and we'll be back tomorrow morning.
Cheers.
Indeed. Enjoy.
See ya.